Hey there, this is Kathy from Mobile Home Loans for You. How are you?
Hi, how are you doing, Kathy? So
I'm
this is
pretty good.
Kelly. Oh, good. This is Kelly from Hills, Deals, and Wheels Mobile Home Investing Course, and today we're going to be talking to Kathy Edmondson, who's actually a loan originator. So those of you who have been thinking about, well, whether or not you should get a loan originator or not, so Kathy's going to give us some information regarding being a loan originator. So Kathy, can you first tell us exactly how you became a loan originator and what a loan originator does?
I've been doing loans since 1999. The last 10 years, I've been specializing in mobile and manufactured home loans. They have you get licensed. It goes off of my real estate broker's license. It's just to get started like a 20-hour class. You renew it every year just to make sure you're up to date in all the changing laws, rules, regulations, and whatnot. But you definitely need to have a NMLS license, MLO license to be able to originate.
Okay, so you do homes and mobile homes.
I can, but I choose not to do the home so much. Once in a great while, I might do one, but I keep pretty busy with mobile home loans for you, so I just don't have time to do the other ones.
Okay. And so what is the criteria? Because I know that I actually found, well, you found me because I had a mobile home listed that was like in the 1980s. And so you made a comment on that, and that's how I connected you because it was out here in Sacramento. So what is the criteria for an older model home versus a newer model home?
Okay, so in our industry, we could call them HUD homes or pre-HUD homes. Now, a lot of times they'll tell you 1977 and newer, but the actual age it has to be is a June of 76 and newer to be considered a HUD home. And that's just the year that they just made standards for the housing for manufactured homes, the building of them. So I can do them older, 1960 all the way to brand new. Different lenders will do them if they're older. And they are a little more picky on 1960 to 69. They want them typically to be a double wide. And of course, it's got to be in really good shape in a park they like, basically.
Okay.
So if you told me you had a 1965 house, I would make sure I got it approved ahead of time before I had your clients do the application just in case the lender said, nah, we're going to pass on this one.
Okay. And so is there like a home inspection done or?
Home inspection is if you want to get one done. That's more for your, sense of well-being because the home inspection goes through the entire house, checks out electrical outlets, hot water heater, goes under the house, checks the roof out, just make sure there's no plumbing leaks. Now, that's not required for us. Something you would do just because you want to do it. Same thing with termite, not required. But of course, the appraisal is. The lender wants to make sure that their collateral is really worth what you're paying for it.
Okay. And so do you give out loans to people who have homes already in the park or trying to move them, or is there a different, financial thing they have to do if they're trying to move the mobile home?
Well, if they're trying to move it, I can't help them move it. I don't have like funds to do the construction to perm or the transportation for it. I mainly do homes in parks already where they're already there,
Okay.
ready to go, or homes that have been moved onto land and they're already there.
Okay.
I work with a lot of new dealers as well, where you can custom order your house exactly the way you want it. You know, what bathtub do you want, kitchen cabinets, what flooring, and then once it's there, I can finance it.
Okay. So a person couldn't like get a loan to have the home move, or that cannot be added into their loan.
No, I can't.
That money has to come out their own pocket.
It does. That's why you want a dealer. If you have a brand new house, they will wrap all of that into one. They can help you get the permits, make sure electricity is hooked up, water, sewer, the whole thing. That's what they're for. And that's for a brand new house. Now, people that move an older house, you're going to have to hire a moving company to move your house and set it up because you want it professionally done, make sure it's leveled right, everything's good to go. Because when the appraiser goes out and it's not health and safety ready, you can't walk in there and live there with no major problems. I mean, it can be ugly. I mean, you can have
Right.
old carpet and whatnot, but it has to be health and safety ready.
Okay. And so what is the criteria, like the financial criteria that the buyer would, like the credit score, income, what would that look like?
Okay, it's going to depend on what program we can put them in, number one.
Okay.
Now, let's say you have excellent credit, 700 plus. You've got a 1977 newer home, which is a HUD home.
Okay.
If you put down 5%, we can get you a 7.25% for 20 years. If you put down 10%, it goes down to 6.25. If you go and put 20% down, now we're at 5.5%. These are 20-year terms, but the exception is if the loan is more than 100,000, we can look at doing a 25-year term. Now that's with excellent credit. I have two lenders that want the excellent credit people. They won't, look at you if you have bankruptcy or foreclosure. But the third company, 21st Mortgage, you can go down as 580. You could have no credit score and you can still get in, but now you've got a 35% down payment. So let's say you have a 580 to 599 credit score. So now we're going to do 35% down. 600 to 619 is going to be in the range of 15 to 20% down. Or if you have a bankruptcy less than 5 years, you're going to be in that category 15 to 20% down. But if you got a 620 and up, which is not too hard to get, 620 and up, no recent lates in the last 12 months, no bankruptcies and foreclosures in the last 5 years, you're probably going to qualify for 5% down. And these loans also will wrap your closing costs in. So sometimes the loan amount is slightly more or just tiny bit less than the purchase price. So basically you're coming in, let's say $100,000 purchase, 5% down, is going to be $5,000, right? So now we're looking at wrapping the closing costs in, the processing, lender fee, title search fee, escrow fees, and the flood cert. By the time you wrap all that into the loan, your loan amount's really close to your purchase price. So you can get in with relatively little money to be able to purchase. Now, the money for the down payment comes from either savings, your 401k, or it can come from a gift from a family or friend. So it's pretty easy. I've had plenty of parents or vice versa, children buy their parents' houses and put the whole down payment down. And it doesn't have to be seasoned like some other companies ask you to do. As long as it's in your bank account, liquid, by the time that we ask for loan docs, we're good to go.
Okay. And so I know a lot of the parks do not like people who have criminal records. How does that work with trying to get a loan? Does that have any effect?
It doesn't have any effect with me. I can get them a loan in a lot of cases, but if you have a 580 credit score, the park might say, nope, I need you to have, 650. So they're not going to be in that park. They need to find a park that's going to be okay with their credit history. They're going to be okay if they have a criminal history. And I know some parks do run both credit reports and criminal histories. So it just depends with what park you go to.
Okay. And do you do like subject to type of deals, any kind of subject to deals?
I'm not sure what you mean subject to.
Like basically somebody else is taking over somebody else's loan.
No, they do not. They will not assume loans.
Okay.
You have to get your own loan. You can't just go in and assume someone's loan.
Okay. And so you mainly do business in the state of California, correct?
Yeah, only in California. That's where I'm licensed at, but I cover all of California. So all the way down to the tiptoe of Mexico, all the way to the top of California.
Right. So a lot of these homes you don't even see.
No, I don't. I don't go out and see them.
Okay.
That's what the real estate agent's for. They're the one that does all the walkthroughs and showing of the houses.
Okay.
All I need to know is purchase price, base rent,
Okay.
other than and year of home, and then I'm good.
Okay. And so I know, and personally, I do not use a loan originator in the state of Texas. I do a lot of my business in Texas, but I have done deals here in California where I wholesale mobile homes. So is there a law that you have to have a loan originator or here in California?
You can go direct to the lenders, but I have found that most people don't know how to do the paperwork. It's hard to get a hold of them at times because their volume is so high. It's kind of like having a personal shopper for yourself, someone who's more available to you, where you're not going through 4 or 5 different people to get the job done. I will be your contact from the very start to the very end.
Okay. And so the loan process, what is like the longest to the shortest? What are we looking at? Because in the state of Texas, a lot of the time, by the time somebody tries to get a loan, the mobile home is gone. We find a cash buyer, or we find somebody else who's gonna, pay us.
Well, if you're open escrow, you should have a hold on that house.
Okay.
Most contracts are written 30 to 45 days.
Okay.
Now to get approved, once I have the application of financials, 1 recent pay stub, the last 2 years W-2s, then we're looking at 2 to 3 days. We'll have an approval for you because I don't do qualifications. I feel like qualifications are quite useless. If people don't know their credit score, they quite honestly don't know their income. And I'm not saying that they're lying. They just really don't know.
Right.
I will ask what their gross income is. They don't understand gross from net. They will tell me what they make after taxes, and that messes them up because now I think you make way less money. And,
Right.
You make more. Or I've had some person tell me, I make 2,400. I'm like, oh, really, a month? And then she thought about it. Oh, I mean, every 2 weeks. Well, that's 4,800. Now you qualify.
Right,
So,
right, right.
you know, but to get going, I always tell people right away, go get park approval. As soon as you have an accepted purchase agreement, my process is this. You give it to your loan officer and you immediately run to that park, get their application, because now you got to go through a second approval.
Okay.
And I don't order your appraisal until I know you've got park approval. I'm not going to waste your $450 on an appraisal if you don't have park approval. So get your park approval done. In the meantime, I'm ordering your insurance quotes. I got your loan packet going. I'm working with escrow and coordinating with them, getting all my escrow docs in. So it's a process. I mean, there's like 4 or 5 things going on at one time. Plus, they have to fill out all their real estate paperwork with their agent. Then they have to fill out escrow paperwork with them. So I always tell people, you know, just take it one step at a time. Like the loan packet I give them, it's 26 to 30 pages, depending on who they are and what kind of assets they have or what we need. I always tell them when they see it, they kind of go, are you kidding me? This is a lot of paperwork. I'm like, print it, call me, leave it in the same order. We're going to go page by page. I'll explain each page, where to print, where to sign, where to date, what to fill out, what does it mean? Because that way it takes you 10, 15 minutes versus 2 hours looking at this stuff, not knowing what you're signing.
Okay.
It's just easier, I think.
Okay. And so when you contacted me regarding my property in Sacramento, you had no idea that I was a wholesaler. So do you work with wholesalers or how does that work?
Well, I would only work with you if you had a client that needed a loan.
Okay.
You know what I mean?
Okay.
So if you wanted someone that wanted to get financed, and that's what I would, you know, help you out, make sure you get your house financed. Not everyone's going to have cash.
Okay. Okay. All right. And so Kathy, where do you see mobile homes like, you know, with this pandemic? Do you see people are more or less like downsizing or people are still looking for those $1 million homes because these homes out here in California really, I mean, a $500,000 home, you're still living in a pretty bad neighborhood. So do you see like of increase in sales with mobile homes versus single family homes?
It's been a huge increase in the last year and a half. My business has more than doubled.
Okay.
And there's a different reasons for that. Number one, a lot of people cannot afford a $500,000 to $700,000 house. And that's a good price range in certain areas that I'm working in. And they don't want to live in an apartment.
Right.
And then if you go get a condo, they're way smaller than a mobile home is. And do you really want somebody above you and to the side of you? Or do you want a small yard?
Right.
You want to put a doggy door in on your sliding glass door where they can go out with a small gated so they can come and go as they please. It has a lot of advantages to it. You can do what you want with your own mobile home to a degree. I mean, you can't go and paint it, you know, red, white, and blue probably.
Right.
There might be some rules about what kind of fence you put in, but you don't share walls anymore. And that's important. I used to always tell the story to people that went from an apartment. Why should I buy from an apartment to go to a mobile or manufactured home? Like, well, number one, you own the house. So you can sell it later, and they do appreciate. And I've heard over and over again how they don't.
Right.
I dare anyone to go on Redfin and look at a house that sold 10 years ago and what the purchase price is and what it's selling for now. It's drastically different. Now, it doesn't go exponentially like you would for these really big houses that are stick built, but it's different. Now, when I was first with my husband, we lived in an apartment for the first, I think, a year. We leased someplace before we got into a house, and I got to tell you, we had someone above us 3 o'clock in the morning vacuuming. I would wake up in the middle of the night just startled because it felt like she was coming through the ceiling.
Right.
You don't have to worry about that because there's no one above you anymore.
Mm-hmm.
No, but you do have that, and you could sell it. And yes, you can move it if you wanted to. Okay. I mean, it's 10 to 15,000. Don't you agree?
Depending on how big the house
is.
In California, yes. In Texas, we're looking about 2,500, depending upon how far you're trying to move it. Yeah, it's
really?
a lot cheaper in the southern states than they are out here.
Gotcha.
Yeah.
Yeah, but yeah, my quotes that I was getting are anywhere between 10 and 15,000. I mean, triple wide was 15,000 to move the house, but they were also moving it quite way. It was far away. It wasn't like, 5 miles away. They wanted to move it like an hour away. So of course it's going to cost more money.
Right. Right. And so do you have any words of encouragement of somebody who's trying to get, like, either be a loan originator or being in the mobile home business, period? Do you have any words of encouragement for somebody?
There's business out there, there's business to be had. I mean, Just be good at your job. Make sure you communicate well. People call you, answer your phone. If you're on the phone, call them back as soon as you're done. Answer your emails promptly. If you listen to them, even on the weekend, if someone's calling you, leaving a message saying, oh my gosh, I really need your help, take the 5-10 minutes on the weekend. Talk to your clients, talk them off a ledge. Make sure they understand what's going on. It just takes a little bit of talking to them. And yes, we're a little bit, their therapists sometimes
Right.
because it's an emotional process to buy a house. This is one of the biggest things you're going to buy. I don't care if it's a mobile home manufactured. I mean, the one I'm working on now is $474,000. That's a big price for a mobile manufactured home, and it's not with land. It's on leased land.
Wow.
There's a Newport Beach park that I work in once in a while. 500, 600,000. The space rent's $4,995.
Wow.
And I don't do a lot of loans there. You want to know why?
Why is that?
The rich people buy them cash.
Wow.
All the time.
You're going to have to give me the
there and hang
address.
out.
You're going to have to give me the address to that park so I can go strolling over there because I can't afford that. That's a lot of money.
I know, right?
So Kathy, what would be your percentage, if you don't mind me asking, your percentage of the deal when you're the loan originator? What is your typical percentage that you?
It depends on where we go. One place pays me 2 points. One place pays me 3 points.
Okay.
The one we split 3.75. I'm not sure the exact math on that.
Okay.
But it just depends. The 3 different lenders I work with all pay differently.
Right.
But that's not the most important part of it, I think, because I have to make sure I get the best loan program for the client,
right,
no matter what. But the one that is actually the best one for someone with excellent credit is one that pays the highest, which works for me. But also I don't do, well, I can, but I don't think it's in their best interest. The lenders that I work with, if you have a mobile or manufactured on private land, permanent foundation, 1977 or newer, I'm going to send you to my friend Cheryl at Prime Lending because she can get a much better rate for you than I can.
Okay.
It's more like a 30-year rate where I can do the 23-year terms, the term of the loan, and her rates are more like a regular stick-built house.
Okay.
So if I see that your client qualifies for her loans, I'm going to introduce you to her first. And if it doesn't work out with her, she'll send them back to me.
I got you. Okay, and so how would somebody go about getting a hold of you if they were interested in purchasing a mobile home or learning anything more about being a loan originator? Could they contact you?
Oh, absolutely. 1-800-520-3191. You can Google me on Facebook, Mobile Home Loans for You, and it's the number four, letter U. And then my email is Kathy, Kathy, and then mobile, MOBILE, home, HOME, loans, LOANS, number 4, letter U, at gmail.com. So my name and my business name.
Okay.
It's easy to find me. You can Google me and find me everywhere.
Okay. All right. So Kathy, do you have anything to add? First of all, I'd like to thank you for coming on my YouTube channel, and I'm sure I'll be giving you a lot of business because I'm actually licensed in the state of Texas. I was thinking about getting my license here. But do you have anything to add or?
No, I think that's about it. I think you just have to weigh your options and what you want to get done, what works best with you. Some people come to me and they say, you know what, I've been looking for a house, can't find one. Or they say, I want to see what the differences are, interest rates and payments and the total, cost. Sometimes they go get a condo or they decide on a house.
Right.
But I have no problem educating somebody to make the best decision for themselves.
Okay. And I got one more question, Kathy. So do you deal with tiny homes at all or?
No, I don't.
Okay.
Not the tiny homes. Those are more like rolling stock and they're hard to do.
Yeah.
But yeah.
No,
not so much.
I had a couple of people contact me about a tiny home. I'm like, why would you invest in a tiny home? Especially, if I am, seller financing a tiny home when somebody could just hook it up to a truck and roll it down the street and there's my money. So I don't understand,
I'm thinking lenders that do those have to put some kind of tracking device on them like they do cars. Because I can't imagine trying to, I'm sure they could probably disable them in some way.
Oh, yeah.
If they were really techie, but yikes, I would have a hard time lending to someone that was iffy. I'd have to make sure they were solid.
Okay, Kathy, thank you so much for joining my YouTube channel, and I appreciate the interview.
All right, thank you. Have a good one.
All right, you too. Bye-bye.